And welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment. Good to see you again.
Good to be here.
Hope you're doing well.
I'm doing great.
That's good. We got a question. You ready for it?
I'm ready.
All right. Which is better for a refinance on my home? A 15-year loan or a 30-year loan? Interest rates are pretty low, and I'm looking for some advice on which direction I should go. Pretty common question right now.
Well, yeah, I mean, interest rates historically are pretty low. They're creeping up a little bit, but they're still low. A lot of people buying homes, a lot of people refinancing what they got. Now, if you go to a 15 or a 30, the first thing you got to think about is the affordability of the payment.
Right.
Right? Obviously, if you're going to shorten your term by half, your payment's going to be higher. But you've also got to think about a couple other things. The term of the loan versus how long do you plan to stay in that house?
Right.
If this is the home that you're going to die in, then that'll help you make a decision.
Right.
Then you can decide which one's best for you and your family. And then at the same time, don't make the mistake of not checking your insurance. So people are refinancing to try to save on that monthly payment. Try to get that payment down. So if you want a little tip to try to save a little bit more, go ahead at the same time, shop your home insurance, and you might be able to save another $25, $50 a month. Who knows? You got to check. You need to review your coverages, your deductible, things like that.
And it's a good idea to kind of lump them together, you know, doing your homeowner's insurance and car insurance too.
Yeah, the bundling effect. You can do that and get some discounts. Take advantage of everything you can while you're taking advantage of low interest.
Yeah.
So now let's look at an example of a $250,000 loan with a 15-year mortgage versus a 30-year mortgage. So when you look at the numbers don't lie. So we take this 15-year mortgage. I looked up the average rate of return on bankrate.com, and it's 2.35 is the average mortgage rate on a 15-year loan. So if you just do a typical 15-year payout, your payment is $1,649 a month, and you're going to pay almost $47,000 over that 15-year period in interest. So effectively, you've paid more. Now, one trick you might consider is a biweekly, but you got to remember, biweekly means every 2 weeks.
Right.
So effectively, there's 52 weeks in the year. So if you're doing 26 payments biweekly, you're effectively making 13 full payments in that 12-month period. So you're kind of doing one extra payment per year. That's kind of how that works. So you take it, you do bi-weekly, look at the interest savings. You save yourself about $4,600 in interest, and you pay your house off a year and a half early.
Right. You've got to look at the long game. You can't just look at that number or that number right there.
Right.
Because you'll do yourself a disservice. You've got to look at the long end of the deal.
Right.
Okay,
and let's say you can't afford that $1,649 on a 15-year.
Right.
Well, you still want to get the house. So if you go to a 30-year and you look at that, the payment is $1,054. And you got to remember, though, the trade-off, 30 years full pay, you're going to pay $129,000 in interest. So if you did the biweekly example there, you know, the 13 full payments a year, every 20 or 26 biweekly payments, you're only going to pay $112,000. You're going to save $17,000 in interest, and you're going to pay your house off 3.5 years early. So when you consider that, if payment amount is the question, which sometimes it is, that's an option, but it's a long-term commitment.
But I've also understood if you go with the 30-year, later on down the road, you're making a little more money that you can always then change it to a 15-year, but you can't go vice versa.
You can. You can go to the expense of refinancing, or you can simply double your principal payment on your existing payment, maybe double it and do the biweekly, so you're pay that one extra payment per year, but during the year, pay extra on the principal, and you can effectively do the same thing without going to the expense of refinancing, unless like you just did, you save 2%,
That's it.
then it's going to make sense to do that.
If people want more information about this or any of the, vast amount of information that you have, how do they get it?
882-1800, the Resource Center. We have 9 people in the department that can shop your home and auto insurance, try to get you the best rate we can, or resourcecenteric.com. Be glad to help you.
That's it. All of it right there.